Is there much left to impress investors heading into next year? Here to take on that question, Tom Lee of Fundstrat. He joins me at Post 9, also a CNBC contributor. Tom, good to see you. Thanks for coming in.
Yeah, great to see you, Mike.
So we can stack up all the positives. I mean, I know you've been kind of in gear with that idea that the economy would power through, inflation would come down, the Fed could become friendlier, earnings are going higher. Big question to me is, how do we set expectations for the year to come, given that that's all in the books?
It's a great question because, we have two back-to-back 20% years, and now investors are wondering how much good news is baked in. But if we look at the 2025 environment, it's a great setup because we have a new administration coming in that's maybe pro-animal spirits, a Trump put. We have a dovish Fed, and as you're pointing out, interest rates are kind of calming down after rising. And we know there's still $7 trillion of cash on the sidelines, and I think sentiment's coming back into check. You mentioned that before with the AAII numbers. So I think it's a good setup for investors. I wouldn't be too worried about the next 12 months.
So don't be too worried. I mean, it seems as if there are all these supportive factors, and when you mentioned the 20% up years in a row, history says actually, the following year is up more often than not as well. What do you mean, do you think, specifically by the new administration being pro-animal spirits? First of all, it's true.
Yeah.
You've kind of seen it at work. It seems to pull in that direction, but are there specifics that the market is fixated on that it's going to drive that dynamic?
Yes, I think that the market's trying to figure out exactly how this animal spirits plays out in markets, but I would say we've got a Treasury Secretary that equity markets approve of. We do know that the last Trump presidency cared very much about what stock prices do, and Jeremy Siegel said this is the most stock market focused president ever. And I think that the uncertainty is around trade and the potential risks around tariffs, but we'll have to see. I mean, that's something markets are going to have to deal with it from an uncertainty perspective.
In a whirlwind of activity tracing through the stock market, one name echoes with marked anticipation: Nvidia. The company recently made headlines with an astonishing boost in its third-quarter earnings, thanks to a selective group of clients making up a meaty 36% of its colossal $35 billion revenue. These curious and unnamed key players have sparked buzz across investment circles, plotting Nvidia's tale of success intertwined with risks. With tech behemoths like Microsoft always lingering close, this dependency raises eyebrows as it forties Nvidia's remarkable yet precarious growth trajectory. Welcome back, everyone, to Investocracy.
Jim mentions undoing things. There is this shakeup of the Dow today. Nvidia is being added to the blue chip index, and as a result, Intel is out after a 25-year run. S&P Dow Jones Indices says it wanted to ensure a representative exposure to semis. Sherwin-Williams will join the Dow as well, replacing Dow Inc., and those changes effective prior to the open of trading on Friday. Jim today mentions the lack of money index to the Dow.
I mean, this is the type of thing, before David gets into his atavistic rap about Dow. Dow Jones. This came out, I was doing my show. I have a show. And every time I say my show, my wife says it's the network show, it's not your show.
It is, they own it.
Right, but suddenly NVIDIA's up 3 on this. Of course, David, there's no money really indexed to
There's no money indexed to it.
This reverses.
Atavistic,
right?
anachronistic, however you want to talk about it, something out of its proper place and time. It is a price-weighted index. It is statistically insignificant. They had to keep it price-weighted because they started it that way, and why we even spend time talking about it is beyond.
Okay, I'll tell you why. We do, because even though I say NVIDIA, only don't trade it, NVIDIA will go back to where it was Friday before this announcement came, and Intel is the one you want to buy. Pat Gelsinger and I, tight.
What did you just say? What came out of your mouth just now?
Told you, Pat Gelsinger and I are tight. That stock's done going down. It's ridiculous.
The sun also rises. I'm just rereading it now. Tight means drunk. Just letting you know.
Pat's not even
Hemingway.
Drinker. Pat doesn't drink.
I know. I'm just saying. Things change. But back then,
talk about being inconsistent. Isn't he a Wall of Shame alum?
You were drunk.
No, Intel bottomed. That was a very good quarter. Pat Gelsinger showed tremendous humility. And I think that matters because before we got bravado, and he basically said, listen, we're a little behind. We're going to catch up. They don't have any really
Speaking of inconsistencies, are you now going positive on Intel?
Yes.
Is that what I'm hearing?
Absolutely.
What?
I am.
What if
I am.
What if Speaker Johnson and President Trump try to repeal the CHIPS Act, as we heard a lot about Friday night?
Wow. I mean, you just have like empty shell buildings? I think it's hard.
Intel hasn't got any money yet anyway. They haven't met the
They will meet it because
they need to.
They'll meet it because your pals at Brookfield.
I need a minute here.
Your pals at Brookfield, they made it happen.
I wasn't here on Friday or Thursday, so I don't know if I missed this.
Try not to miss work, and you'll be like you'll get the insight.
Oh, I was working on Thursday.
That's right. Oh, you came in. You had an idea that we're going to go with Zaslav. What was that? The Zaslav trade? What is that? I have to see Zaslav. See where I'm working.
Give me a quick summary
so here's
of
what
why you have suddenly changed course on Intel.
Because after the election, Qualcomm said they might or may not buy Intel. In the meantime, Intel bit the bullet, took the losses, took the charge. Their CFO prevailed. On the call, Gelsinger did not say, we're number one, we're the best. He admitted they almost had like New York Giants status, if I can really go there. Anyone worse? Not to know of. And I feel like that it's a brand new Intel.
So it couldn't get worse. So it only can get better.
Perfect.
Thank you.
God, he's good. He's really good.
Thank you.
As the whispers in the financial world grew louder, fueled by Nvidia's massive strides in the GPU domain, a sector known for fueling artificial intelligence ventures, the focal point shifted to these enigmatic top buyers. Was it a tech novice's idea of a solid bet, or the seasoned investor's next big move? One joke encapsulated the stock market's sentiment perfectly. Why did Nvidia bring a ladder to the market to reach new heights with its AI chips and clients? Yet, behind this jest stood undeniable truths. The demand for AI-capable chips has rocketed, bolstered by Nvidia's new Blackwell GPU architecture, which boasts a mind-blowing performance leap from previous models. While Nvidia's pricing power brings smiles to investors' faces, translating into extra profits and jaw-dropping market valuation gains of $3 trillion over 2 years, the concentration regret is the elephant in the room. With 3 companies collectively soaking up 36% of the revenue cake, any reduction in AI spending might dampen Nvidia's sparkling sales accomplishment. Peeling back the layers, the narrative paints a scene of tech giants like Microsoft, Amazon, Oracle, and others surging ahead, purchasing Nvidia's GPUs for developing AI prowess and supporting cloud-based services. This new era, with Nvidia perched as the overlord of chip making, was unequaled, or so it seemed. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Sarat, Nvidia's going into the Dow. We learned that news the other day, and that's going to be Friday before the opening bell. Just give me a thought on that. If we talk about the influence of a Berkshire selling, then influencing how the stock trades as it relates to Apple, what does this mean for how the stock trades as it relates to NVIDIA?
I think it keeps its momentum. It's the relevance. It's taking Intel out, replacing with NVIDIA, and basically saying, hey, this is a company that's going to be there for a long time. Now, you're not going to get that positive tailwind that if it came into an S&P, because there are not that many people that buy the Dow index, but the relevance of this to show that, hey, these products are going to be here for a while is really good for the stock.
All right.
All right, and NVIDIA now briefly pulling ahead of Apple in the market cap race, and there you see it's what 3.389 versus 3.382. Wow. It hasn't closed above Apple on that metric since June. So NVIDIA doing very nicely. Thank you very much. But neither are suffering, I wouldn't say.
It's impressive.
In market cap. And
we are back. Most mega cap names lower following last week's earnings reports, with the exception of NVIDIA, which has not reported yet. Those shares are rising on news the company will join the Dow this week. Here to share his view on the Mag 7 is the Dean of Valuation himself, Aswat Damodaran of NYU's Stern School of Business. Welcome back. It's nice to see you again.
Thank you, Scott.
As a shareholder and an observer, and both are valuable to us, you've had a chance now to digest these. What's your takeaway?
I think that these companies have become really good at playing the earnings game. I mean, you look at them; they look at the expectations. They come in 2 to 3% above. At this point, you're wondering why even bother with the expectations. They're going to beat it by 2 or 3%. I think the real story, though, is deeper in the earnings reports, and I think you see it play out with, for instance, with Microsoft. The recognition that AI's products and services, the potential is there, but the promise is not being delivered in terms of monetization. So I look across the companies, no blowouts in either direction, but I think in many ways, what you need to be looking for is a change in narrative, and it's not coming right now. It's pretty much the same narrative that's been running them all year long.
forecasts heralding a towering spend on AI infrastructure by Microsoft, Amazon, and Alphabet sustain Nvidia's optimism, yet pose questions about the long run. Some of these corporations are already charting paths to self-reliance with their chip designs, which could tighten the reins on Nvidia's future share of the AI feast. Fresh articles, tweets, and reflections chimed resonantly, highlighting Nvidia's gluttonous share of tech providence and fabrication troubles, like potential heating issues in new Blackwell units. These ripple effects foretell daily revenue dips, underlining the rock and hard place spot Nvidia might find itself in if strategic shifts by top customers materialize. In tracking stock prices and echoes from financial oracles, the playful banter, "Do you invest in Nvidia and its magnetic hands? Or does it pull you alongside for a surprise roller coaster ride?" sounded less like banter and more like analytical inclination. The mindsets have thoroughly permeated investor gatherings, swiftly shuttling between tweet and stock chart, predicting the next market move with seasoned serenity. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
We mentioned Nvidia, it's, pushing Apple right there on the top of the market cap chain. It obviously has had an incredible run, but not every stock is in Nvidia in this market.
No.
How are you judging the semis?
This is the one place where I really think you've seen, and this has really been true all spring into the summer, into the fall, where you've seen leadership really fracture or split. We know how good the Nvidia chart is. We know how good Broadcom has been. Where's AMAT? Where's Lam Research? Where's ASML? Where's Samsung? It is, of what is perceived as leadership, I think it's the faultiest of that. It's the weakest under the surface. Only 25% of semis are actually above their 200-day moving average here. You do get some good seasonality with semis the next 4-6 weeks. I think if you got a bounce, I'd be more inclined to fade that bounce in semis than I would be chasing.
I asked you earlier about Berkshire selling Apple, so let me flip it and ask you about Nvidia now and the inclusion in the Dow and how you're thinking about that based on what you've seen through the years.
Yeah, I mean, obviously, on some level, the inclusion of Intel previously and not having a play on Nvidia, which is 7% of the S&P 500, probably just made the Dow feel a little bit unrepresentative of the economy right now. Now, you could definitely make the case that it's just grabbing onto a high momentum play way after the fact, after its greatest gains. I was just looking at the Nvidia versus Apple equation in terms of, market cap neck and neck right now. Well, Nvidia has about a third of the revenue in the coming year and about half the net income. So you could obviously say it's a more expensive stock, but it's growing so much more quickly. So in the short term, first of all, there's no brand new reason to buy a stock because it's in the Dow. History says that's not at all a reason to buy. There's not a lot of money indexed to the Dow. It's much more about, the way that it's validating its current role in the new tech economy, which we sort of knew already. So again, I don't think it's a sell the news. Maybe it's a buy because of the capitulation on Intel. But at this point, it seems much more about the Dow trying to stay relevant.
As the dust settles, is it time to conclude that Nvidia's stock scenario is just a digital mirage? Tempting as it is, the outlook for Nvidia stock remains promising, with predictions pointing toward an upward surge into 2025. The owning of Nvidia is, for many, a ticket to a pioneering future headlined by advanced GPU technologies and AI-driven innovations. Although dependent on key clients, the company's grip on market leadership and continually surging demand underlines potential untapped growth. With expert assessments up the hierarchy and continuous cash flow increases, a tactful investment might lead to beneficial outcomes. Could Nvidia sustain its dominion and tackle emerging tech with the same fervor? Indeed, the dialogue among investors and stakeholders positions Nvidia as an intriguing yet challenging element in the stock arena, beckoning commentary and opinions. The floor is open. What do you think about Nvidia's future in this ever-evolving tech landscape? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.